crypto has reached a critical moment in its history.
Passage of the Genius Act.
The Genius Act. The Genius Act.
The so-called Genius Act has been a key priority for the president.
The U.S. released a slew of game-changing bills for cryptocurrency last week, signaling a long-anticipated seal of approval of crypto from the world's largest economy. Those bills are the Clarity Act, something called the Anti-CBDC Surveillance State Act, and the Genius Act, which is what we're focusing on today. So why do these three pieces of legislation matter? It's all expected to have major implications for the Middle East, which has already established its own level of crypto adoption. But let's explain what's going on first. President Donald Trump signed legislation called the Genius Act, more formally known as the Guiding and Establishing National Innovation for U.S. Stablecoins Act, doing pretty much exactly what it sounds like, but with some important technicalities.
It's a very important act, the Genius Act. They named it after me, and I want to thank you. I want to thank you.
In a nutshell, it's meant to regulate cryptocurrency in the U.S. on a national government level, something that hasn't been done before. It comes from an air of uncertainty from the U.S. surrounding digital currencies. One of the biggest debates over the last decade has been about how to classify it.
As lawmakers work to try to understand what cryptocurrency even is,
there are basically two ways: security or commodity. Securities represent an investment in common enterprise, while commodities mean they're a tradable good or asset, like oil or gold. Based on differences like that, a number of bodies within the U.S. financial ecosystem have had their own rules and standards on crypto. The Commodity Futures Trading Commission, or CFTC, and the Security and Exchange Commission, the SEC, come in to deal with their respective classifications of crypto, CFTC with commodities and SEC with securities. The Internal Revenue Service, the U.S. body known for collecting taxes, treats cryptocurrency as a property, not a currency, which is different from a representation of the US dollar and ultimately makes it taxable when used, bought, or sold. And even the Department of Justice has methods in place to investigate and stop crime related to crypto. But this is new territory.
Let me say the entire crypto community, for years, you were mocked and dismissed and counted out.
The Genius Act came into effect immediately upon passage, last Friday. It essentially formalizes rules around cryptocurrency pegged with the dollar. That's called a stablecoin, which is exactly what it sounds like. Why does this all matter? There's a lot of detail, but many see the passage of the Genius Act as an official step by the US, making a long-awaited move from regulatory ambiguity to structure. We're asking questions like, what happens next? What if countries like the UAE that have established stablecoins backed by their own currency already? We're speaking to two experts today.
Cryptos have never been this real.
There's definitely, I would say, winners and losers in this.
To get some answers to those questions as crypto enters this new chapter. This is Business Extra from the National News in Abu Dhabi, and I'm your host, Salim Essaid. Naeem Aslam is the CIO at Zaye Capital Markets in London. He's a former hedge fund trader with more than 15 years of experience in investment banking and specializes in blockchain technologies, sustainable investments, and traditional finance markets. Hey Naeem, welcome to Business Extra.
Pleasure to be here.
Really appreciate your time, and I want to ask you straight away, part of the purpose of this bill is to reportedly nudge crypto into the mainstream. Is that realistic at this point?
I think it is as realistic as it can be, because cryptos have never been this real all this time. But with President Trump being in the office, now it appears that it is actually becoming real. You know what, Salim? I think you and I, we talked about this particular factor. I've been advocate of cryptos, especially with the Bitcoin, with the store of value for a long period of time. And then the reason that when we actually did it was when BlackRock bought a minor share in the Bitcoin mining company. And the significance of all for the viewers back in 2007 financial crisis, BlackRock was the main broker and the advisor to the White House, how to come out with them. And then all those recessions that happened afterwards, BlackRock was the White House advisor. So when BlackRock was investing in that one, we know that, okay, this is going mainstream. But with the President Trump being in the office, and with the aspects of how tokenization of assets is going to take place now, everything becomes and looks much more real, where everyone has started to believe that, yes, this is actually happening. But at the same time, I think it is very important that there is enormous amount of a hype. And I am always cautious with the approach when things are way too much optimistic and you get carried away from the bubble that it is about to become. And then if it busts, where do you go? And I think that is the thing that kind of worries me a lot. And then I'm sure we're going to have plenty of other discussion around it.
Yeah, definitely. And I think you mentioned a key point at the beginning as well. We're saying that with Trump coming into office, we have seen prices go up and then go back down, and that usual volatility that we'll see. But it seems like there's something about these three bills that were discussed last week. Is it because like there are more written rules now when from the US side, like that wasn't there before? Is that finally giving it legitimacy to break new records as it has in terms of Bitcoin price? Is that what we're seeing at the moment? Or is this just yet another high as things are being discussed?
No, so you have actual clarity from the regulator's perspective, which the whole industry have been waiting for, crying for. They're saying, you are fining us, you are putting us in a restricted cage without telling us what we have done wrong or how we can improve it. Now you have those guidelines, how the tokenization of the assets, how the beginning of any particular crypto or digital assets can take place, how you can go about and issue stable coins and what kind of a stable coin. And more importantly, I think more importantly, it is about becoming more transparent. Now you have a particular rule with these particular bills that you have to report after every 30 days. Here is the audit. Tell us your reserves are one-to-one with what particular asset, how many dollars, and then how you are going to do them, right? Before, you could just create a stable coin out of a thin air, and then you can say, I have printed 30 billion or a 1 trillion worth of a stable coin. I'm going to do about a 15 million or a 20 million worth of a marketing to get my brand out. And then that's it. Now you have a regulator who's going to come and sit, watch you on the top, see how things are going, and then how things are going to progress.
Exactly. And with guidelines that companies will know how to operate and also not be incriminated for operating in a space where there are no rules yet, but still facing some severe consequences, as we've seen with FTX and others.
Yes.
So looking at what's next, can you talk about what changes we'll start to see in the crypto space as a result and by when? I mean, I believe this is supposed to kick off in next year, but can you give kind of like a timeline of what we're going to see and when?
I think you and I last year, when Trump wasn't even the president, we kind of discussed on this on a very high level that what will happen when Trump comes into the office and he gets things done his way, i.e. these particular bills. And then the more important one is the capital gain tax bill. Because once that is gone through, my goodness, the region that you are based in, the people have been flocking to this particular region only mainly for two reasons. One, because there was a clarity about regulation, and that brought a lot of adoption. Because of the clarity, a lot of entrepreneurs, a lot of businesses, they came to Middle East because they saw how the ecosystem was so rich and it was flourishing with the clear guidelines. Number two was your capital gain tax, because they all talk about, yes, there's no capital gain tax over here. You can go and then you can cash out your cryptos, you can keep everything else. But what happens when these two important laws, they actually become a law in the biggest economy of the world, where the whole of the world capital is sitting, and that is the United States? What happens to these particular companies? Because the whole region where you are based, I mean, in comparison to the United States, is quite small, right? So if these companies want, the only reason for them to go over there was primarily to take advantage of the ecosystem, which they have developed it incredibly well, without a doubt. That hats off to the government and to the regulators, how they've established the whole ecosystem. But now a real threat is on the horizon, which is the United States. And all those crypto firms, exchanges, liquidity providers, and the projects, they're going to move from there to the United States because, one, they have a clear guideline, what exactly to do, and that there's a complete support from the background, from the government. Because remember, that is what you and I, we always talked about. The whole reason the whole UAE was that, or the Middle East was that, okay, you know what? The government is actually supporting you in what you want to do with providing you the clear guidelines. But hey, look what? The United States has done it even more better, where President Trump wants the whole America to become the forefront of the technology. It wants to adopt it. And he's giving you the capital gain tax. They'll be free, like you'll have a no capital gain tax. So what is the point for us staying in a smaller market?
All right, thank you so much. This was really informative. I appreciate it.
Pleasure.
Ola Doudin is the CEO of BitOasis, a leading cryptocurrency exchange and digital asset platform based in the UAE that focuses on Arabic-speaking and Gulf countries. It serves retail customers in growing numbers of institutions such as family offices, fintechs, and small banks. Hi, Ola. Welcome to Business Extra.
Hi, Salim. Glad to be with you guys.
I appreciate it. There's a lot going on in the crypto space, and I wanted to know what's your reaction to the new bills coming out of the US last week, and do you see it as a major shift for the Middle East?
Of course, last week was a big week for crypto. I would say not just for the US, for the whole industry globally as well. I think introducing the Genius Act, the Clarity Act, and Anti-CBDC is a historic move, and it's been long waiting. I think it's great to see the US taking a leadership role in the crypto space and providing clarity for the digital asset space. And now there's going to be more demand, not just in the US, but globally for digital dollar. It's way more accessible, much more kind of fast cross-border movements. And there's going to be huge demand for US treasuries. So stablecoin issuers are the third largest buyers of US treasuries. And what's actually expected is that as this industry grows from $100 billion as stablecoin sort of market cap to $1 trillion, they could potentially become the US largest holders of US treasuries. I think the losers are quite obvious in the sense that unregulated stablecoin issuers, there's no space for them now to play. There's regulatory clarity. You have to be compliant. So I think with more clarity now that the US is providing on a regulatory perspective, other regulators in the region are paying closer attention. The UAE, to be honest, and Bahrain have been doing this for years. Central Bank of UAE last year have issued the payment token services sort of regulation in terms of how to regulate local AED stablecoin issuers, but also foreign stablecoin issuers that want to engage in the UAE market. In Bahrain, we've seen recently some regulatory frameworks on stablecoin issuers, BHD in terms of Bahraini dinars and USD as well. So definitely the Middle East, when it comes to crypto, I would say GCC specifically, there is definitely a head start.
But just to understand, what doors do you see this opening for the Middle East? For example, as you said, the UAE and Bahrain already have that infrastructure there. Does this help them, work against them in any way, or is it going to increase certain types of transactions, given that the US market is basically giving the sign that they approve of crypto and are willing to adopt it?
I think with more regulation overall, globally at an industry level, the market grows, and I think there's more sort of vote of confidence. For you to engage in the Middle East market, for you to engage in the US market, you actually have to be regulated in those respective local markets. So there's definitely more connectivity and cross-border sort of movement now in terms of stable coins, now that there's regulatory clarity across different markets. So I would say there's going to definitely be more institutions on both sides of markets engaging by way of partnerships or potentially actually setting up in those markets. But you still have to be regulated, obviously, from a local perspective to engage in that activity by way of Central Bank of UAE or now in the US with some of the recent bills that we see being introduced.
Yeah, I see what you mean. It still needs to be discussion between governments in terms of how to coincide. And as you mentioned locally as well, that the UAE has also rolled out its stablecoin policies and taken steps ahead of most countries globally. And where is that now today? And do you see that coinciding and working with the US stablecoin bills that they have issued last week?
So obviously the frameworks are there. There's clarity on that. I think in terms of products and the actual services are still not in the market, but I think we're not very far from that. So that will be hopefully kind of issued and listed soon. But I think the infrastructure from a regulatory perspective is there. And I think the market is in early stages, but it is not far from being live already. From a regulatory perspective, in terms of the US and potential impact on that, regulators are in constant kind of conversations and talks. So it's a bit early to kind of figure out how much of an impact on the regulation that will have. But again, I think essentially there are always sort of industry standards that are held by different regulators. And I think there's definitely some collaborations on that. So we're sort of yet to see how much impact of that's going to have on the UAE.
Definitely. And just to get your perspective on this, right now the world's largest economy is on its way to openly adopting crypto, signaled by even a major move this week with Trump media already accumulating $2 billion in Bitcoin as part of its treasury plan. Does this potential dominance threaten the Middle East crypto market, or is it something where everyone can work together?
Definitely, I would go with the latter. I think for us, and we've seen this in other areas as well, is whenever the US supports or provides a vote of confidence from a regulatory perspective within crypto, and overall, I would say from a tech and innovation perspective, that really grows the market and the industry from a global perspective. And I think also gives a vote of confidence for institutions and regulators where they haven't regulated, maybe in other parts of the Middle East, to start more seriously engaging in this industry. I think with the Genius Act specifically, essentially what it's signaling and saying is that now stablecoins and the virtual asset space and crypto is a critical and an essential piece of the financial services infrastructure. And it's not something that is sort of a fad or it's an experimentation. It is an essential piece of infrastructure that has to be built for an economy to continue being competitive and to continue innovating in financial services and payments and trade. I think one interesting market, particularly for me as well, the largest economy in the Middle East, Saudi, hasn't yet done a move in the crypto space and hasn't regulated the space yet. It'll be interesting to see how much of that will influence the speed of regulators in Saudi looking into opening up the crypto market and providing more clarity, I would say, for crypto companies to start engaging in the Saudi market.
So I was going to say, with this move, like the message that this is sending about mainstream adoption, right? You're operating in the Middle East, but there are only a few countries that really accept crypto. You mentioned already the UAE and Bahrain, but how do you see the other countries that are maybe more restrictive or waiting for a move like this to take place? Do you see them, for example, countries that are where it's illegal, for example, to transact in crypto, still changing their policies on this as a result of this in maybe the next few months?
Yeah, definitely. Again, I think crypto has proven, crypto stablecoin and some of the applications that we have of this technology has proven that it is an integral part of financial services infrastructure. It is the future of finance. And it is not something that can be ignored as a country, as an essential piece of growing your economy. So I do think other countries across the Middle East and other regulators are paying attention. And I do think that's going to have a positive impact on how they look at crypto and prioritize regulatory clarity.
How do you think that people in the region are going to use crypto differently now as a result? Do you see them using it for new venues of transactions, like maybe more? I know that BitOasis already has a partnership with MasterCard in terms of using it for everyday transactions and to bridge that gap to use it more openly. How do you see, for example, this change from the US policy side affecting how people use crypto in the Middle East?
So I think we're seeing certain trends in the Middle East market, I would say very similar to other emerging markets as well. We're seeing that also from an industry perspective, like in Turkey, across different markets in Africa. And we see some of these reports and sort of research data and analytics. Far and foremost, obviously, crypto is looked at as an alternative asset that could be an inflation hedge, and overall as a new store of value. I think the cost of a stablecoin transaction is a fraction of what it is on the SWIFT network or using banks. And there's that ease of use as well from a consumer perspective. You can send the payment in real time, on a weekend, on a weekday, and it gets instantly received. So I think there are benefits, or there are essentially, in some sense, the stablecoin network using a blockchain as an L2 is showing much more superiority from a consumer perspective versus some of the traditional payment networks or the global payment networks that we have.
Just to get a sense of what comes next. It's an exciting time. I'm sure you're at the ready for the changes that are happening globally. But what would you say is going to take place in the Middle East in the next 6 to 12 months? Do you anticipate certain changes taking place or exchanges behaving a certain way as a result to adapt to the new bills coming out of the US and essentially this global change?
I think crypto stopped being from this sort of vague experimental technology where people are sort of just investing in it and kind of get rich quick type of schemes into an actual essential piece of the financial services infrastructure. So essentially now we're seeing real use cases with players from outside of the crypto industry now seriously engaging with this technology. So essentially you have a new infrastructure being built where it's more superior to legacy systems and existing traditional financial services infrastructure. I think that's definitely been the promise of this technology from day one, and I think you're seeing it built in real time right now.
Exactly. It's definitely an exciting time of what's to come. And as you said, especially in Gulf markets where the infrastructure is already there, there's already regulation guidance. So it's just a matter of wait and see. And I think this is something that's been a long time coming. So Ola, thank you so much for speaking to us.
Thank you, Salim. My pleasure. Glad to be on the show.
Thanks for listening to this episode of Business Extra from The National. Make sure to check out The National's podcasts wherever you stream. Also, help us improve our podcast by taking our 2-minute listener survey. You can find the link in this episode's show notes. This episode was produced by Yasmin El-Taji. Arthur Edison is our audio engineer. Our podcast editor is Duat Farid. And I've been your host, Salim Essaid.